Good morning, good morning. How you guys doing? Nice to have you on this beautiful morning. Sun is out. Gorgeous day, gorgeous day. Hope it's nice where you guys are at. So, the markets. What are we looking at this morning? So I asked you guys to let me know what it is that you guys would like to look at. And well, first we got Bitcoin. So we can start by taking a look at the tickers that you guys want to look at. I don't mind doing that, and we'll apply the Sherlock analysis process to the charts to see what's going on. So first, yeah, Bitcoin is the first one. Now we had a good rally up in Bitcoin recently from the lows, and if you guys have been following us and following our analysis, you would know that for some time now we were talking about how we were expecting price to drop from these highs here up in the 60s. I told you a story about a friend of mine who is pretty adamant that when price was up here in the 60s that it was going to go to 100. I told him, yeah, that's possible, but when you look at the chart and the lack of proper structure, this can easily drop down to the 12,000 area, easily. And although he had all his reasons not to believe that to be the case, it still dropped. Okay, did it get to 12K? No, just fell short of it, about 16K. And then we've been watching the bullishness ever since. So it's been creating demand. So institutions are buying Bitcoin right now. Okay, but the last significant area that I'd be interested in is down here at the 42,000s. So when somebody comes to me and says, "Hey, would you be interested in buying Bitcoin?" Yeah, sure, but not now. Not now. That's for sure. That's one thing I would not do, is be buying it now. So, I mean, you have to understand and have a game plan when you buy something. You always have to ask yourself, why am I buying it? So for Bitcoin, why am I buying it? Because that's 61,000. Okay. So what's the idea behind buying it now? Is that you think in the next 5 years it's going to be 100,000, right? What proof, what evidence do you have to support the idea that price is going to get up to 100,000? If you buy now, you realize price could drop, right? Do you know how far down it can drop? No. Okay. Well, are you going to put a stop loss in your trade? Yeah. Where? Is there a logical reason for having it there? I mean, these are all the questions that you have to ask yourself before taking any trade, right? That's just the basics. But I see way too often people are not working out these details before taking a trade. They take it for a lot of different reasons. There's a lot of triggers. There's a lot of triggers in the market. There's social media, there's the news, and there's talking experts on TV that are telling you different things. But if you don't know how to do the analysis, number one, if you can't look at a chart and do multiple time frame analysis and figure out where's the big money buying, and why do you care about the big money buying? Well, number one, because the big money moves the markets, not you or I. The big money moves the markets. So don't you want to be doing what they're doing? Okay, first of all. So once you come to that logical conclusion, it's where's the big money, where are they buying, and where are they selling? Okay. And if I want to go long, that means I have to do multiple time frame analysis, and my analysis has to tell me that the banks are creating structures, and they're building structures to support price action going higher. All right. So once you've determined that, and you know what time frame these structures are in, and which zones are coming into play, and on what time frame, once you know those things, then you can start to form an idea for a trade, okay, that will be logically thought out, that will be in line with reality. When people see the forecasts that we do and the trades that we do, they are always amazed that price action plays out as we suspected. You know, not every single time, but the vast majority of times, people are always amazed. What they are not realizing is that there's a process that we go through, okay? And this is what we teach at the school. There's a process that you have to go through. You can't just jump into a trade. So for instance, Bitcoin's up here. So what do you do with Bitcoin? Well, you can see that I clearly have an area drawn down here, a demand area. Do you see any demand area above there? No. The only one is down here, okay? So for me, when I look at this chart, the only thing I see is price is high. It's made a long move to the upside. It's high. Would I want to buy there? No. I don't care about owning Bitcoin. I don't care about owning Berkshire Hathaway, Tesla, Meta, Google. I don't care about any of that. The only thing I care about is what the chart tells me. Okay? The actual situation with the chart. If the chart is telling me the banks are buying and they're buying here, okay, set an alert. Let me know if they decide to reverse price down to that buying area. If not, I don't care. I move on to something else. I'm only interested in charts that support what I'm looking for, that support the idea of either buying or selling because the big institutions are doing it. That is all I care about. So again, we look at Bitcoin and we see that there's room for price to drop. So am I interested in buying Bitcoin? Not in a million years. Not right now. Not right now. No, you couldn't convince me. You couldn't convince me to buy Bitcoin now because I realize the risks involved. Could it go up over 5 years? Yes, but I'm not going to buy it at 60K and then watch it drop to 40K. Do you know why? Because you know what could happen? If they wanted to, they could take out this area and drop price even more. Okay? If they wanted to. And who's they? The big institutions that control price. If they wanted to do that, they would do it. Excuse me. So, you think logically about it, okay? If I got into a long position here, knowing that it could drop further, when it drops further, let's say I enter into another position here. What happens if they remove this area and they drop price? Then that means I take a loss on a position that I had up here and here. And if you don't know how to manage your risk, the size of your position that you're going to be opening up here, probably going to be a large one. And the size of the position that you're going to open down here, probably going to be a bigger one. Because your typical trader thinks this way, right? They open up a position, and then if it goes against them, they open up a larger size position because all they need is for it to go up a little bit more, and then they'll break even. You know, this thinking is so backwards from how you should be thinking. So, whereas your typical trader would be like reading the headlines thinking, oh, you know, Bitcoin's likely going to go higher because it's like almost, you know, closing at all-time highs, and you know, so they buy it, and then as it drops they continue to add, right? And we know this because we can look at the retail sentiment and we see exactly their behavior, right? So that is how your typical trader would think of it. How I would think of this is I would wait for price to come down to this area, And at that point, I wouldn't just automatically assume that the banks are going to come in and start buying. No, 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 no. Once price gets to that area, what I'm going to be looking for is I'm going to be looking for some bullish price action. Okay. I know what it looks like when the banks are buying. I know what it looks like. Okay. This is the result of tens of thousands of hours of studying charts and knowing how to draw and locate the institutional supply and demand, and studying what it looks like when institutions stop selling and start buying and start building momentum to the upside. So I would be waiting for that. And so when I wait for that, guess what? There's going to be an opportunity for me to get in on a smaller demand zone. So you know what that means? That means my entry point my entry point will be smaller and my upside will be massive. Okay? That's how I would trade it. And your typical trader, you know, but they open up the position here. Where's your stop loss? Below the previous lows? I see this all the time. It's like, it's just, oh, below previous lows. Okay, but like, why below the previous lows? What were the previous lows? Was there any reason why the previous lows? Oh, because that was the lowest that price went. Yeah, but like a few days ago, there was another low that has been taken out. So why are these current lows what you're judging your stop loss on? I mean, there's no logic behind it. There's no logic behind it. So the plan that I've got, there's logic behind it. Prices come down into an institutional buying zone. This buying zone, based on the formation of the chart, the multiple time frame analysis that I've done, there's about an 80% chance that zone is going to hold. Okay. Now you combine that with watching the institutions accumulate a position and start creating patterns on the lower time frames that are bullish, and key areas of supply that would have been used to facilitate a move lower are now non-existent, opening up the chart for a move higher. And then new demand comes in and I take a trade and I base my risk off of that zone holding. It's logical. It's been thought out properly. It's been tested through looking at historical charts. I mean, this is what we do in our classes. This is why the classrooms sessions that we do are so important, because it's these ideas, these concepts that we're constantly testing over and over and over. And then we are discovering new things about the market. Like, it's like a journey. Every time we do a class, it's like going into a foreign land and walking around and learning about the trees and the nature and studying the people of the land. And every time you have a new experience, we're learning something new. You can't replace what we do. You have to do it for you to learn. There's no other way around it. You don't do the studying, you're not going to see, you know. I could walk through the forest and be an expert at noticing the poisonous plants, at noticing the little bugs, by knowing what rocks to lift up to show you certain types of worms. You know, I could be an expert in the field of the forest, and I can bring an amateur. The amateur would walk around and not see what I see. That's why in the classes I'm pointing out these things that, you know, an untrained eye cannot see. And the more you start to see it, the more it becomes your knowledge. You know, when you come to the school and you watch the video lessons and you do a few classes, I'm giving you knowledge, but it doesn't become yours until you start studying it and seeing it over and over again and journaling it in your journal and making notes and thinking it through yourself and coming up with your own perceptions, to your own perceptions of the data and what we are revealing to you. It doesn't become yours until you make it yours. All right. So, so this is my thought on Bitcoin. Okay. And hopefully that's a little bit helpful in your understanding of how to read the markets. US dollar, Japanese yen. Yeah, let's take a look at that one. So price is rallying up. Are we surprised? Not really. Didn't I tell you that price was hitting a demand area on the weekly chart? Right here. Okay. I told you price was hitting a demand area, and so likely see a push to the upside. And so that's what's happening. It dropped from supply, hit demand, now it's rallying. I mean, you see, guys, price isn't dropping for the reasons that you're reading on the news. It's simply not. Okay. It's not. I can tell you that 150%. Right now it's still with supply. Let's look at retail sentiment. What are they at right now? US dollar, Japanese yen, 79% short. So they really have started adding back to their shorts at the bottom here. Boy, oh boy. You know, as you can see, guys, retail traders are all over the map. There's no logic behind their thinking. Or there might be logic, but it's totally flawed, as you can see. They're always wrong. Always. But, and the thing is that even though their logic is flawed, they continue to do the same thing over and over again. At no point do they ever come to the conclusion, all right, my logic is wrong because I'm constantly losing. I have to stop doing what I'm doing. And I get it, you know, like you go out there and you try to learn and all you see is the same nonsense with support and resistance and Bollinger Bands, and you get so confused you don't know what to do. And it's meant to keep you in confusion, okay? Because when you know the reality of the market and you know what really you should be looking for, when you see what other people are using to make their trading decisions, it's just bizarre. It's really bizarre. Okay, U.S. pound because of the news today. Pound U.S. dollar. Let's take a look at the pound U.S. dollar. Little push to the downside. Yeah. Well, we're expecting that, aren't we? Right? Aussie $1 million trade I gave to you guys for free. And it dropped just as I said it was going to drop. Right? Look at the drop here, okay? This is the zone I was basing my trade off of. You think that's pretty accurate? Okay. Do you think that's pretty accurate, shorting from an area like that? My risk is very small. Entry point here, stop loss here. Look at that risk. Okay. If you're basing your trade off of a 15-minute zone like that, which you easily could have done, because we knew with great certainty price was going to drop, and I gave you the logic behind that. And if you haven't seen that, you really need to read this first. Go to our blog and read this this blog post I made here 5 days ago. Before the drop, sentiment data tells us a story. Aussie US dollar, our outlook, okay? Our outlook. So we laid out the logic for you as to why we suspected that Aussie price was going to drop, okay? And then it's a matter of knowing what time frames to look at. You know, there's some of you that want to day trade. And my advice to you is stay away. It's like It's like somebody saying, oh, I want to play with snakes. I want to become a snake tamer. Okay. I want to play the instrument and lift up the basket, take off the lid, and the snake comes out. I want to tame snakes. All right. And it's like, okay, fine. You can learn to tame snakes. And I want to do it with a poisonous cobra. The world's most poisonous cobra. I want a poisonous cobra to be like this close to my face. You haven't even learned how to tame a snake, and you really want to play with the poisonous cobra. It's the same thing as, oh, I want to day trade. You don't know how the markets work. You don't know the supply and demand. You don't know how to locate supply and demand. You don't know how to draw trend lines. You don't know what a trend looks like. You don't know how to do multiple time frame analysis, but you want to day trade. I'm telling you right now, if you don't know those things, you will not succeed in day trading. I would make that bet 100 times out of 100 times. Okay, guaranteed, 100%. You will not be successful. Okay, you might have a few winning trades, but you're guaranteed to lose. 100% guaranteed to lose over time, without a doubt. Because when you understand how difficult day trading is, the only way day trading would work for you is if you understood what's in play right now, under what time frame. What does that mean? If a supply zone on a daily chart is in play, how much momentum to the downside should I expect? Where should my reasonable target be? What zone can I be looking for and zooming in on a smaller time frame for an entry? If you don't know these ratios that you need to trade off of, you're screwed. 100%. You don't stand a chance. So my advice to you, you want to learn how to day trade and be successful at it and be able to do it left, right, and center. You need to understand how the market works. There's a lot of concepts and principles that you need to have under your belt, period. Okay. I've been doing this for years, and I could take on day trades, but I know when to strike. I know when the odds are in my favor. I know the bigger picture, so I'm able to narrow it down. A lot of people say, oh, cut data, you can't use that to day trade. Yeah, you can. You can't. You say that because you can't. I can. You can't do it. Of course you can't do it, because the data comes out and it's 4 days late, right? People have all the excuses in the world to say, oh, but it's late. How could I use it to day trade? Well, because you're thinking the data is going to come out and you need to trade it, because you've programmed your brain to work that way. Oh, data is released and I trade it right away. That's how you programmed your brain. I look at it differently. I collect the data. I look at the retail sentiment. It gives me a grand picture of what's taking place. Once you know the grand picture, then you can zoom in and figure out how things are going to play out on the smaller time frame. Much, much more accurately than if you didn't have all that information. So it's just, you got to change your perspective. That's the biggest thing. You got to change your perspective. Okay. Anyways, we did a couple charts. Yeah, everything's looking good. So far, things are playing out. So take this money that I'm giving to you for free with these trades before they happen. Take some of this money and spend it at the school. Because sometimes I hear you guys, oh, I don't have the money, I'm saving up, blah, 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 blah. I'm giving you free money here. I gave you the trade before it took place. I told you the trade before it moved. And then it moved as I said it was going to move. So take some of that money if you traded alongside me. I didn't tell you to take those trades. Remember, I'm not a financial advisor, but I'm showing you what I'm doing. And I've shown you how accurate I've done it before in the past. If you're taking these trades and making money, spend some money at the school. Okay? Spend some money at the school. Anyways. All right, so that's it. I'll let you guys go. I hope you enjoyed the session. And don't worry. I see some comments. Oh, the Aussie's pulling back too. The Aussie is pulling back right now. Where's it pulling back to? It doesn't matter. It doesn't matter. I know where it's pulling back to. You want to know where it's pulling back to? Join the school, learn, and then you don't have to ask me questions like, where's it pulling back to? You'd have the confidence of knowing exactly what's happening. So invest in your education, because if I decide to disappear and not do these shows in the morning, if I decide not to provide support and provide analysis to you guys, what are you going to do? Where are you going to go then? To another channel that's doing support and resistance? Good luck with that, you know? Come and join the school, learn how to trade properly, and then make something of your trading career. That's my advice. All right. Sayonara. We'll see you tomorrow morning. Take care, everybody.